So the market has went down with coronavirus, and I keep getting the question, should I take advantage right now and be investing in individual stocks? So today, what I want to share with you is as we see the recovery continue out of this, we see businesses starting to open, and we see the economic recovery by looking at the stock market, the economy as a whole. This is a question that keeps popping up. So when you keep hearing on the news about these companies that have lost all of this value versus where they were in January or even the beginning of February of this year, that people start to look at this and they go, maybe I should be taking advantage of this right now. And it really comes down to a couple different things that we see that might make sense in doing this. Number one, you have to look at what risk am I willing to take on? So what I mean by what risk you're willing to take on is when you invest in individual stocks is very different how those are going to react versus investing in the market as a whole, a larger group. So just think about it. If I were to be cooking, so I'll use this analogy with this. When I'm cooking, if I decided to add just a tremendous amount of pepper to that dish, I don't care what everything else tastes like. I'm only going to taste pepper. So when we're looking at your investments, if I get too much of any one thing, it's going to overpower everything else. So I'm going to have all of this in my portfolio that's creating turmoil. So with individual stocks, our position is that we don't go heavily into just individual stock positions. We see more of a benefit of having a collective as a whole, being able to use index funds, different options with that, to be able to get more lift out of your portfolio and decrease the risk that you're taking on. We also know that right now, in a time going through this, when we see all of this market volatility, and you see companies like Marriott, for instance, that their stock is half the value of what it was at the beginning of the year. And we start to look at it and we go, do I feel like that's a healthy, strong company that's going to recover quickly from this? So if you feel that way, if you feel like a company like Marriott or the restaurants that are here in town or anybody else like that, if you feel like they're going to recover quickly and you want to invest in them, that you're looking at that going, do I feel like it's going to snap back? Well, that's important to know how you feel, but you also have to know what timeline am I really looking at before I'm saying that this is a good thing. If you're hoping to get a return on that and you see that this stock grows tremendously over 3 months versus saying I'm in this for the long haul of 1 year, 2 year, 3, 5, 10, whatever it might be, you're going to be entering very different expectations there. And the other question is making sure that how are you going to monitor this after the fact? So whether you're working with us or someone like us, you want to make sure that how are you reevaluating, is this still a good idea for me down the road? So anybody that we've been working with, if we're using individual stocks, it's for a small portion of the portfolio. Overall, 5, maybe 10%, at most 20% for somebody. So that way it can help give some lift, but it's not what we're counting on. This is for money that we're talking about down the road, 8, 9, 10 years before that we're worried about touching this, because we know that it might take longer than 3, 6, 9, even 12 months to fully recover with these stock values. So you don't want to be too gung-ho saying that, man, I fully believe in this and it's going to recover quickly. We also want to make sure that you have a process that you're actually vetting those stocks, that you're making sure that you're paying attention to them. One of our partners that we use is this group here. It's with Sterling Capital. So Sterling Capital is a fantastic resource that we have, $53 billion of assets under management. So why is that important to us? We want to make sure that how are they doing this? Do they have the resources to be able to truly research with this? They're independent when they're going through and they're monitoring with this. So they don't take money from any other organizations to be able to be listed in here, to be a part of this. That is, unfortunately, in our industry, that's one of the things that sometimes happens, is you pay to play. So with Sterling Capital, this is looking at some of the groups that they work with. So you can see with that list some major players that are out there that they help manage money for. So it is a diverse set of clients that they work with. When they're going through, as I click through with this is the part that's most important to me, is what is the investment process? So how are you actually determining versus just going through and you just randomly say, hey, I want to go, yeah, that company, that one's a good company, let me go with them. What is the actual process that you're going through to figure out who do you want to be part of your portfolio? So for Sterling Capital in this fund that we have access to, they basically look at this and they say, what are the largest 250 U.S. stocks by market cap? So they start there, and then they narrow it down a little bit more. 75 stocks that depreciated the most out of that list since the recent market peak. So that market peak was February 21st, and since then, that obviously it lost value for a lot of people, and we've seen that recovery. And then it's making that portfolio out of 25 stocks. And this is designed right now. It's tilted to U.S. large cap, so your large U.S. companies with that recovery. And the important part was that last piece, it refreshes monthly. It's looking for where's the opportunity going to be. I don't want to skate for where the hockey puck is right now. I want to skate for where I feel it's going to be in the future. Otherwise, I'm always going to miss the puck. So that's what a fund like this is looking to do. So when you're researching to find those individual stocks that you want to take advantage of, right now very well could be a good time for you. If your time horizon is long enough before you need to access the money, you've got a long enough runway, then that's something that can definitely help you out. We see that it's beneficial if it's a small portion and you have time on your side to dilute the risk that you're taking on of that individual stock. Now, what stock it is, that's going to be different for everybody. So I don't have that magic bullet for you on this today. Unfortunately, that's something that's going to matter to you. What companies do you have interest in? Where do you feel comfortable with this? And that's discussions that we can have individually because you are unique. There's no one size fits all that says, investing in company X is going to be great for everybody. That's not true. So to say that that's going to be the same case, it's not. It matters what's important to you. What are the industries that you see support in? If I've got somebody that works in restaurants or hospitality, they tend to be more geared towards enjoying restaurants and hospitality because they get it. They understand. They feel like they have more of a knowledge base around that. They're probably not investing in biotech companies because they don't understand it. That's not a knock on anybody. It's just the fact that that's the way that it tends to go. People that work in certain industries tend to support and follow certain things. For me, I'm independent and objective. I don't care. I care about how it's going to fit in overall for you. So having that investment plan that you always come back to of knowing, when do I need access to this money? What is it going to be used for? Do I have access to it? Or am I investing in things where I don't have the ability to go grab it individually when I need it? Individual stocks operate very differently when they're held in different types of accounts. So if I have a individual retirement account that's holding individual stocks, it's going to be treated differently than if I have just a regular non-qualified brokerage account. So keep that in mind anytime that you're investing. So is right now a good time to invest in individual stocks? The answer is maybe. If you want to see if it's right for you, you can click the link to be able to schedule a 15-minute conversation. I'm happy to help you out with your individual questions to see if this might be an appropriate course of action for you to take. I thank you for your time, and I hope you're enjoying this series.
Thank you for watching the Life Wealth Group YouTube channel. We hope you found this video informative. If you have any specific questions as to what you heard today, don't hesitate to reach out to us for a complimentary phone call or meeting in person. Also, don't forget to subscribe.